in this budget, we have to find out the new sources of revenue. Because why I'm saying this, when we are having a high level of unemployment, it means people below, forget about first 3, 4, 5% of the people in our economy, remaining 95% had a direct impact of unemployment, 95% had a direct impact of inflation. Then the third is that how to generate more revenues so that the public expenditure for these 95% of the people who are having a negative impact on their quality of life because of unemployment and inflation, that money can be spent on them. I totally agree when I think Mr. Garg had mentioned that 15 lakh crore or 16 lakh crore is what we are giving on our interest and the mandatory payments. I agree on that. And so indirectly around 75% to 80% of our tax revenues are going directly for the tax payments and for the interest payment and the mandatory payments. So we have to search for new sources of revenues. And I will give my opinion later on that what can be the new sources of revenues. But one thing which comes directly to my mind, that enough of this K-shaped recovery programs.
Sure.
We don't require that 3% or 4% are earning and 96% are left behind. Enough of that. We require something, a high tax collection from the people whose market cap is now 10 lakh crore, 20 lakh crore, 30 lakh crore. And I'm not saying to the recognized players, I'm not anti-industry. Neither my party is anti-industry. But we know many startups, they are in a losses and market cap is 1 lakh crore, 1.5 lakh crore, 2 lakh crore, and consistently next 10 years they are showing losses. That next 10-year projected income is in loss. Still their market cap is increasing. They are using our infrastructure. They are using our policies. They are using our manpower. So how to collect revenues from these things is something which I think I expect as an economist from this, but because I want a massive investment in public spending or in the form of public investment on these 96-97% of people who are suffering from high unemployment and consistent high level of inflation.
I think we should also be reasonably honest enough to admit that there are not many opportunities for growing tax revenue for the government. Look at the income tax and the corporate tax, which is basically the direct taxes. We had a big bump in last 2 years thanks to the inflation and the prices which went up, especially of the commodities, which is now coming down to some extent, and therefore expectation that the direct taxes can be. I entirely agree with Rahul that we actually need to raise the tax to GDP ratio, but by only increasing the rate or otherwise, you can't do that.
Restrict myself to the point that Mr. Garg mentioned about the scope in the tax GDP ratio being limited, or rather suggesting that tax rates are not the way to go about dealing with that. And I fully agree with that in terms of the rates, the economy that we are at the rate which are not necessarily the lowest. We are at the rate which are reasonably decent and slightly on a higher side, both on the corporate tax as well as on the individual tax. But the point I would make still is, therefore, any step that we take to address this big revenue gap and seek to increase the tax GDP ratio would need to be not causing the additional burden to the people. And now that's a difficult thing. How do you raise taxes to increase the tax GDP ratio without having to cause additional burden on the taxpayers, both the consumers as well as taxpayers? And now there, I would say that considering things like, which are already in practice to some extent, and few experiments on that, for example, to widen the tax ratio, you could look at optionally providing the presumptive tax to more services, more businesses which are not currently covered. And as Mr. Garg said, that services, both for the self-employed people as well as for the organized players, is a sector where people get livelihood. And therefore, if we ease the taxation and include more people in the service sector to give them an option to follow the presumptive tax basis at a reasonably good tax rate, I would say that this would formalize a lot of sector in services to bring them to the tax net, number one. Secondly, I would also say that we have been experimenting with the phasing out of the tax incentives and profit list in particular. And now is the time when even a harder look can be looked at that what is the tax incentive that should remain on the tax book, and those could be very, very focused on the things like R&D, things like ESG, as was mentioned. In fact, I'm slightly of the view that the base for tax should always be a tax base which is economic profits. And the criteria for measurement of economic profits is reasonably well laid out, particularly now in terms of the standards about it. And therefore, I would, on the contrary, suggest that any tax that arises due to any notional or nominal or artificial profit or value to be recognized should be shunned away with. We should have the taxpayers completely in sync with what their economic profits are, and the tax should be a percentage expressed as their economic profits, and any notional adjustments therein which are artificially either increasing or decreasing it should be done away with. So on a principle, I would say that's the method to go, rather than looking at more to bring in tax through any artificial valuation methods of any kind. Because one more thing which is important, and Mr. Vallabh, I fully agree with his connotation of the creation of wealth and tax thereon. But at the end of the day, when you have a valuation as a base, it doesn't mean that that doesn't come to tax. It does come to tax, because anything that you churn becomes an economic profit. A wealth also becomes an economic profit. It's only a matter of time when does it become an economic profit. It may become an economic profit for one rather than for another. So I would say that I would favor a taxation which is based, comprehensive, catch-all on the economic profit rather than on the notional profit.
New taxes. See, broadly, I think across countries, the examples we give of where tax to GDP is high relative to India are countries where tax rates are low, compliance is easy. And, that's the broad framework in which we need to basically design everything, whether we are thinking about, income tax, corporate tax, GST. We can fine tune, but broadly, my suggestion would not so much be that you raise tax rates in an environment. I think particularly, as I said, next 12 months will be challenging. So, my recommendation would not be to raise taxes at this stage. And I think tax rates in India are already quite high. We need to move towards better compliance and lower tax rates. That's going to bring in actually more people in the net and widen the tax base broadly.
I'm a company with a market cap of 1 lakh crore, assume, and my top line is 1500 crore, and I'm in a loss. And next 20 years, I'm showing to public that next 10 years I will be in a loss. I'm not hiding this. I'm showing it to you. And I'm not paying any tax. So don't you think that the companies which are having a market cap beyond a particular threshold, there should be some tax on the top line? That whatever is the top line, say for 1% tax on top line. So it is not for everyone. See, if I am having profit, I will be covered in the regular income taxes. But if I am showing losses and my market cap is consistently growing, and I am doing a massive advertisement during FIFA World Cup of 500 crore and I'm not paying taxes to government. So I think we have to take care of these types of organizations, and there are many. And in the next 5 years, this list is going to grow.
We have moved towards the ecosystem of lowering of taxes, both at the corporate indirect tax and at the individual. We should go in that direction. 115J like reforms which simplify tax ecosystem, because one of the major concerns at the industry and business and professional is that there is a harassment element to the complexities also. We have to accept this reality in the tax ecosystem.